Welcome to the Rapid Recap. It is September 3rd, 2015. So welcome to September as we conclude the summer months. Now more trading volume should pick up. We have the school season that started. More people are probably back into the rhythm starting in the next couple of weeks. And then we'll have the holidays approaching, which sentiment always tends to be a little more positive. There's usually more positive spirits as we approach into these winter months. So this week's Rapid Recap, the topic of discussion is about reading stock charts is like studying footprints. So we're going to cover a handful of stocks, and the ones that we'll cover, let me just pull out this Trello. So this week we'll be covering the S&P, the Dow Jones. We'll talk about Apple, Halliburton, SolarCity, AMTD, GoPro, and SUNE. Now we talked about GoPro in the past rapid recaps. We also talked about it in the critical charts, and it's moving really well to the short side along with Apple and a few others. So I'm only covering a handful of these because for the sake of simplicity, and also that many more and other charts are listed in the critical charts. So my goal this week is, of course, the lesson, and we'll cover a couple of charts, but if you want more in-depth charts and more stocks, then they'll be in the critical charts over there that I posted just the other day. So let's start out with the overall market, how things are going, what's happening, and what's going on with the Dow Jones and the S&P. So if we take a look at the overall market, we take a look at the weekly, this was our critical line right here, the line of support or the line in the sand, as they say. And this line was broken. Now, if we do a breakdown on a day by day, the line broke. We had a couple of days of follow through. Okay. Then we talked about last week that it was possible. I said it was possible that it could come back to retest this level. And if it did that, if it came back to retest this level or showed any sign of weakness, then you would see me shorting the stock. Now, it didn't get all the way as high. And what does that mean? If it doesn't get as high to come back higher here and then reject, what does that mean? It means that the market was even weaker than I anticipated or even hoped. So that, what does that mean? Does that mean I don't take the trade, or do I still take the trade? Well, if I see weakness coming in, I noticed and I was planning for a second sell-off. Watch the previous rapid recap. Watch that rapid recap on the market from last week. So watch that rapid recap, and I discussed it very clearly. I think it was a 40-minute video where I gave you some contingency plays that if the market came back up here and then rejected it, I would short the stocks again, or I would short the market. If it came back here, powered through, and there was weakness sideways, then I would wait for it to short again. Now, if we powered really high, really fast, then chances are it would sell off again because it would go up too fast, too quick. So there's a lot of different contingencies that I talked about. Now, when the market doesn't go up as high as you anticipate, this means that there's even more weakness. So the market, if we look at it right here, it bounced on 8/26 with 207.9 million shares. Then we did 171.5 million on the next day. So that was on 8/27. So we had 207 million, and then we had 171 million. Then we kind of isolated, didn't fully roll over, but you can see weakness. It didn't continue moving higher. We moved sideways basically on Doji idling at 131 million. Okay. We continued lower, started to pick up speed to the downside. As you can see, we had a little bit of a longer spread. You're watching the spread. What's the difference between the open and close? Here we had 141 million, a little more than the average. Then we had 171.3 million, which is where our next sell-off came, and we picked up speed. What does that tell me? Well, if I compare it, 171.5 versus 171.3, and then in the past we did 225 and 293, that means that when we came down to this level and we bounced, even though right now it's not selling off on heavy volume, it's not ready yet to continue the sell-off, but it's not ready to go higher. So where am I positioned? I'm positioned short still. And the reason is because these little pops, you don't buy into them because of this rolling over effect. Notice how it's rolling over and selling off further. Okay, so now what's happening the last couple of days? What's going on and what's happening again? Well, now the last, 9-2, we had a slight bounce. Okay, we had a slight bounce here in the market. Now, it wasn't really slight when you look at the points. I mean, it was about 200 to 300 points right there. But then today, what we did was we powered higher and we sold back off, evening just 20 points. Again, idling sideways. It's basically a doji. That tells me strength is not there and volume is weakening. So look at this. Look at what's happened in the last 3 trading days. So we had on 9/1, 171.3 million shares to the downside. 171, okay? Note that number, 171 million. To the upside, we had 133. And now, today, we had 87. So what does that tell you? Does that tell you that this move is powering higher, or does it tell you that it's building for lower prices? To me, it's telling me it's building for lower prices. Okay, we talked about the plan. Now, if you don't like that chart, you like the S&P, fine. Look at this right here. So here, same concept. We have critical support line. Stocks sell off. We sell off on 343.7. We sell off on 506 million shares. We sell off on 368. Okay, so let's say 500 and 370. Okay, then we bounced on 826 on 339. 339 versus 368. 339 or 368 on the sell-off. Which one's bigger? The sell-off, 368. Then we pop again on 827, 273 million shares. Compare that to 506 million. Compare that to 368. Compare that to 343. We had 273. Definitely more on the short side, okay? Got to remember, people are positioned differently, so they're taking some profits. Then, what happened on 828? 160 million. Compare that to 368, 506 million, or 343. Okay, 160 million versus 343. Which one's going to win? The bears. Then we roll back over, 160 million. It's building. It's building for that rollover, 160 million versus 160.4 million. So we got 160.5 short, 160.4 to the upside, okay? Then you compare it also over here, 506 million, 343. We're looking over here now, next day, 9/1, 254.1 million shares sell-off versus, what do we have to the upside? 273, 339, we have 160, okay? And here we have 254. Big difference here. When you start comparing these, who's winning out when you're looking at the individual trades. Now, again, we have 159 to the upside just the previous day, 254 to the downside. 159 versus 254. Which one's bigger? 140 versus 254 versus 368 versus 506 versus 343. Now, this is just a basic guideline of overlooking things. Now, in reality, I look at the actual physical numbers in more detail, calculate it, and I'll share that with you in a future course because it gets more complicated than this. But hopefully, just looking at this perspective without making it too confusing, you get the point that if you look at the previous couple of bars here on the daily, 343.7 versus this one of 273, you understand that to the downside, there is more action. So now what happened today, as we look at the volume, what's going on a 10-minute, we bounce higher And then the rest of the day, we continue to sell off. And at the end of the day, look at what's picking up. 8.4 million shares down. We're bouncing on 6.4, and then another 8 million selling off. That means people are selling their shares. Now, I still could, and I'm prepared for stocks to bounce and still continue to retest this level right here. And that is simply because it happens. Operators and market makers and everything, they take these stocks higher, and they'll take them higher to milk this, okay? They'll milk it, okay? But normally, right now, looking at the overall picture, these are acting weak. This stock market is still acting weak. Whether we look at the S&P 500, look at that bar. There's the doji right there, the dragonfly doji or gravestone doji right here. Take a look at it. We pop higher, and then we have the sell-off. The rest of the day, they're selling. So pay close attention of what's happening and where the energy is. Where is the energy? Now, as we look at stocks and you start looking at the market, I'm going to use this example of footprints. Okay, so here we are looking at these footprints. And this is a picture off the internet. And you can see that one set of footprints is a little bit more, how shall we say, it's a little bit more funky. It has a different kind of curve, okay? So we have a slight curve to this footprint. The other footprints are pretty much kind of straight. They continue moving straight. So these footprints tell a different story, okay? This person over here walked in a different fashion, okay? So they walked in a little bit of more of a curvature fashion. This footprint said that this person walked in a more straight and perfect linear fashion. Okay, so all these footprints are going to tell you different things as you evaluate charts, as you evaluate things. And that's what stock charts do, is looking at the chart, they share with you footprints, whether that's a stock chart that's moving in this fashion, then you know the person is either pretty bad at walking, or maybe they're just having fun and running around like kids. Or they have some kind of footprints that go like this, circular. And again, it shares with you a new or different story, okay, the way that they walk. So you need to start paying attention to what the chart is telling you. Now, because you're experienced in how people walk, you know that, some people walk like this. Other people swivel a little more. Some people, they do a little, they might be skipping and doing little skips through the sand where there's space. There's one footprint, one footprint, one footprint. Some people might be doing a double jump where you have 2 feet here, 2 feet here, 2 feet here. So they might be going through the sand in different ways. But all these things give you clues, gives you insight to how stocks move. They give you clues to how things are behaving. And if you're new to the market, if you're new to trading, if you're new to charts, you might not know these things because you don't understand how stocks walk. You don't know how they breathe. You don't know the pace. You don't know if it's doing a jumping jack, if it's doing a dive off of a cliff, if it's doing a lot of different things. So you have to be mindful and understanding about these different footprints that these charts are making. And if you're able to see these footprints, you're able to spot what's going on and what's happening with these footprints, you'll be able to better predict future prices. So in here, looking at the S&P 500, if you know and understand the footprints, right here was our sell-off. Boom, stock goes down. My footprint, from my understanding of reading footprints, I see that this pop happened. I was already preparing for it last week for that pop and for the next leg down. Now, right now, it's still not a lot of selling coming in, but I'm still preparing that if this builds sideways, let's say 6 weeks this way, that this market could continue to sell off further. And if we take a look at this way right here, if we go just 6 weeks right here, consolidate for a bit of time, and we break some of these key patterns right here, we could roll off even further. Can it happen? Yeah, absolutely. Would it mean the market is unhealthy? No, because a 50% sell-off right back here, which we talked about before, coming back to here and bouncing would still mean everything is fine. This is just a digestion period. This is just a period to digest, to pull back. And it's a great thing because it creates new chart patterns. It creates new opportunities. We can even just come back right here to the 200-day moving average on the weekly and bounce right here at this level. So we can do a smaller pullback. But if we do get a pullback, then you can expect that I would add to the position. We're already short, but if we bounce higher, and right here, this bounce and sell-off created a new resistance point for you. So now this is a resistance point, and this is a resistance point. So if we get to this level, you could see more selling coming in. If we break through it, you're still watching this level, and then again, another short opportunity. But to me, the footprints still show me that this is a bearish move to the downside. That's what it's building for. So always be mindful and be prepared to how and what your stock is doing. All right. Now, moving on to individual stocks. We've got a lot of lines here, and let me just simplify things and start back fresh with Apple. We talked about this for months. I've talked about it, and this whole trade is really on the recaps to the critical charts. I'm trying not to beat on it too much because this was the big winning trade of the year for us. But right here, you have the resistance here. You have resistance here. This was the initial swing point. Here's the sell-off. Okay, there's another sell-off. You could have shorted it right there. And even if you got in late at this point, you would have waited right here. Okay, you probably would have gotten in right here, and then you got stopped out because the stock went higher if you would have waited there. Next opportunity could have been on this bounce here, which you knew the stock was weaker. There's the sell-off off that moving average of the 20-day. You could have shorted it there or been even safer and waited it here and got in right there. Now, this stock continued to move lower and continued to pop higher, reject prices, and sell off further. Let's zoom in a little bit. So here, then we sold off, popped again higher, rejected it, didn't even make it, similar to how the market is doing, rolled over. See, we're starting to roll over. There's that C-shape kind of pattern coming in. Rolled over, sold off, bouncing higher, and now again, we're rolling over on higher volume starting to pick up. So look at the previous day right here. We have a 76.7 million, and then we bounced on 61 million. 76 million versus bouncing on 61 million. Which one do you think is going to win out? And then today we had another sell-off day on this stock. So where do you look at it now? It's creating more support and resistance levels. You're looking at some swing points here if you're looking at some minimal things, but really right there at the upper level is your resistance line right there. But if you want a smaller one, you're watching this level right here, which is another adding opportunity to your short, which is what we talked about, was right up here. And also now you have this opportunity where the stock is kind of idling, and it could idle here for 4 or 5 days. There's nothing wrong with that. And then still, I'm on the camp that it's acting weak until it proves to me otherwise. Once it proves to me otherwise that it's strong, then I will change my analysis. But for the time being, if something is sick, then, if it's coughing, if it's breathing not right, then it's sick. So you can't, fact is fact. To me, that's why it's acting weak, is if the leg is broken, it takes time for it to recover. If you have pneumonia, then it takes time to recover. Then you have pneumonia. You are sick. So the same thing here. If the stock is acting weak, you call it as it is, and it's acting weak. So these bounces, I don't buy into that. Instead, I'm waiting for resistance lines and adding to the short. And once they break short, you take some profits. They bounce again. So here's what you do. They break short, you take some profits. They pop higher, you put those shares and get ready to pull the trigger to go short again. So as they start going short, you go short again with those shares that you took profits down here. And as they break lower again, you take more profits. If they break certain critical lines, critical levels, critical supports, you add to that short even more. So you're playing this game of risk reduction. That's what this business is all about. It's about a couple of things. Number one, it's about probabilities. Number two, it's about risk management. It's about money management. It's about being patient. There's a lot of key points that most people don't grasp, but you really have to take profits. In order to capitalize on winnings, you have to take some profits. So there you go. There's Apple acting weak, still short side. Here we go on Halliburton. Look at this. You have a few critical swing points. It's building for lower prices. It is building. Okay. Setting things up. Watch it closely. Here's our previous swing point right there. We discussed that one before in the past. I'm pretty sure I remember it. Going lower now, and if we break this line on heavy volume again, great place to step in. And here is our ABCD pattern for those of you that are watching the ABCD pattern. So here's your A. Here we have a B. Here's kind of your C. Here's your D. If you want to look at this on a bigger scale, here's your bigger A. Okay, so that's an ABCD pattern. So here's a A to B, B to C on a larger scale. The D will be down here. Okay, so that'll be your D. So let me clear that and maybe give you a better perspective. A to B, B to C, C to D. Okay, so that's how that'll look with a pattern. And of course, you have that smaller ABC within that, and you could have traded that one as well. Beautiful, beautiful setup. Here's Solar City. Again, getting ready for the setup. It's bouncing a little bit right now, so I would be patient on this one, but you're still watching this lower level on this line. It could come back up to this level, so this one may take a few days, could take a few weeks, but you're still waiting for this line to break, but it could snap at any time. You don't know. You just set your alert, you watch, and boom. If it breaks, heavy volume, you get in it on the short side, because look at that cluster right there showing you a good cluster of bearish bars. Now, we did have one bar popping it higher on that week, but usually these things take time to digest. So if it's able to hold this level, then all bets are off, and then you're just waiting. But if things break lower, if things sell off right here at this level, then you're just going short, and then take your profits as we approach that $35 level and see how it continues. Looking at AMTD, this one on the weekly, long trend line. Looking at the daily, still long trend line. Here's your support line. Stock broke right there. There was your short entry right here. Looks good for lower prices. You could have gotten it second day, third day, even now on the pop right here. Just like many other stocks, here's your footprint, comes back to the retracement, and then what happens? What happens next? Well, we sell off again. We start in a pop, and then we're acting weak on that pop. So what does that tell me? It tells me the stock is acting weak. GoPro, love this one. Love this one. Another big trade right here. Okay, we talked about this one right here. Long resistance line, long support and resistance line. Had a huge break over at this level. So this was our initial break. Came back, rejected it here. Didn't even make it over here. Came back here, isolated it or idled for a little bit up top. Didn't have the juice, sold off. That's your opportunity to go short. Stock continues to go short. And now we have a critical swing point right here. If it breaks this line here, because we have a few critical areas, that's your next opportunity to go short. You're waiting for this line to break. If you're not in it short now, you don't get in it now because you're late to the party. The shorting opportunity was up here or really even down here. Now, as we get into this level, you're already kind of late to the party. So if looking at the daily, look how many days you had an opportunity to get in short. Okay, so you had multiple days to get into this stock short. So you had one of the first ones here, stock powered higher. Here's another one, a huge wide price spread on that bar. Okay, wide bar. Stock continued lower. Then we had a bounce. There's the bounce. Then what do? Reject it. We reject it, and volume is, look, picking up to the short side. We reject it. There you had, let's see, 1, 2, 3, 4, 5, 6, 7, 7 days, almost a whole week of trading to go short this stock. And then we break also the 200-day moving average right there, key sign. So even if you got into the stock late right there after the 200-day moving average, you still would have been up, what is that, 12 to 14, 15 points right there. If you had 100 shares, 15 points, you can do the math. If you had 1,000 shares, how much money would that be? Now, as we approach this, you should be taking your profits. Here's the line. This is the critical point. As we approach this, take some profits. Now, looking at this just from a sheer hypothetical point of view, hypothetically, this stock is acting weak and it's picking up speed to the downside. So my guess is that it'll break this line. That is my educated guess and prediction. Does that mean I'm not taking profits? No, that means I'm still taking profits, but being ready to add to the position again just in case. Because it could turn around here, bounce a little lower, fake you out, and pop higher and get to 50 again. So I still want to make sure I take some profits at this level and then be patient and see if it breaks. Okay, if I'm more confident that it's going to break, which on this one I am more confident, then I may take less profits, but I'm still taking some profits. And then I raise my stop, and I might raise my stop to here or here, But if it breaks this line and it breaks this level to go lower, then I'll raise my stop to possibly right around that $40 level because you're in profit. You're a huge win. You're up here, really, we're all the way up here at the $21 level. You could be up here at the $20 level. Even if you're late, you'd be up $12. You'd be up $12 in this stock. And that's if you're late. So look at it. It's approaching this level. Watch these lows. More than likely it's going to clear it, but you be mindful. Okay, we talked about this one in the previous August 27th rapid recap, critical charts, and a lot of other things. So watch that one. And then last one I want to discuss is SUNE. Longward upward trend lines that break on heavy volume is a key. It is your footprint. It is a big footprint. When a stock is at its highs, and if we look at this stock on the monthly chart, this really tells me the longer picture. Now, you would have thought this stock was really powering higher, but looking at the monthly, you can see in 08, really these are the highs. Already, I know that this stock was acting weak back here in 09. It's not at its highs over here at 90, but I know that we have a lot of weakness here. So as we're approaching these levels over here and getting into this bar, this region, there's going to be some weakness. So as we start zooming in, you can say, let's get rid of that. We know, okay, the stock has been weak before, but now we start getting into more, let's say a little more intermediate things. So here's our A pattern. Here's our B. Here's our C. We think it's going to go higher, and we're nearly reaching our projected D move. But you have to remember the bigger picture that this stock has overhead resistance. It has that lot of volume there, okay, in the past over back there. So when we start coming into higher prices and getting close to that D level, okay, and then you start seeing this major bar kick in, and then you start seeing another one, okay, by the third one with heavy volume, more selling is coming. And if we go to the weekly, you can see, if we go to the daily, you can see that the volume is picking up. You had 1 day, 2 days, 3 days, 4 days, here 4 or 5 days, 6 days. And then after the 200-day moving average broke, you had more days. So you had a few weeks right here to get into the stock short. And then we moved down 12 points for a $25, $30 stock. Okay, so you had a lot of time and a lot of opportunity to see these things. But you wouldn't have known that if you didn't look at all the footprints, looking at the footprint. What is that footprint telling me? What is that stock telling me? When you start looking at things like this, when you start evaluating charts in this way, when you start looking and knowing how things move, how things react, that's when you get better at predicting charts. And there was, a few people that really applauded me and thanked me for a lot of the charts that I do because they really feel good about the way that I explain it. And, for me, over time, it comes natural. And now it's not really about me. My analysis is going to be very similar from day to day. And that's why we do the recap just once a week, because most of these things apply for multiple weeks at a time. So for me, I'm looking to contribute to make sure you understand. And how do you get to read these footprints better? It's kind of like, how do you get to read murder cases better? How do you get to read all the different fingerprints better? How do you get to read some people that learn how to do penmanship or signatures or autographs and really read and learn the art of spotting fake signatures? How do they get to be that way, or how did they get to see these things? And that is through practice. It is through studying. It is through putting in the time, putting in the effort and the energy into these things. And that just simply takes time. But I wanted to share with you some insight that this is really a business about learning how to read things. It's about learning how to listen and be disciplined and be aware of what's happening. And a lot of people like to be dishonest with themselves. They don't want to admit to what's happening with the market because they're in positions. We get clouded by the judgments, and that is because of the psychology that affects us. We're in the position, we get more emotional, we get tied into it. So you need to step away and be aware of what's happening to you personally, or just be mindful and honest with your different trades, with your different stocks. Look at it on a non-emotional basis and look at what's going on with the fingerprints, what's going on with the footprints of that stock, and where is it moving? How is it moving? Is it jumping up and down with 2 feet, not going anywhere? Is it just rocking side to side? Start learning the pace, learning the rhythm, and then you become better at it. And that just takes time. It just takes time in the markets. It takes practice of looking and reading charts, studying charts, and you'll get better with time. So put the time, put the energy, put the effort. And that's one of the reasons why I like looking at charts. I do the critical charts. That helps me become better. And doing the books, for example, also helps me become better. So, for example, that 245 money-making stock charts that we have, the book series, and we have the penny stock books coming out soon, probably in the next couple months here. All those things really just help me read and get better at charts. I study more and more charts. So even though we post 245 charts, I don't know if you realize this, but I probably looked at over 2,000 to 3,000 charts by the time I choose those 245 charts that go into that. And I look at their past, the different years. So I'm looking at maybe 4,000 or 5,000 different charts to make that one book. And that's where you become better. That's where you become good. And it's just one of those things that just takes time. And if you study things, you study and you practice it, you too will become better. All right, thanks for joining me in this week's Rapid Recap. I know we didn't do a lot of stock charts specifically, but they are in the critical charts. But looking at some of the stocks, you see that GoPro, great shorts, worked out well. SUNE as well. Dow Jones still acting weak. We got S&P also acting weak. We popped higher and then sold off. So that tells me there's weakness. Apple as well. Looking at the big boys, Netflix also pushing down on this level, also acting weak. Get ready for another shorting opportunity if this one breaks that line. Amazon, you also have a few levels that you're playing in right there. So be mindful. A lot of these stocks, especially these bigger companies, once they break, week, a lot of the other stocks tend to follow. And, remember, the leaders lead the market lower and the leaders lead the market higher. So if these are selling off, the rest of the market usually comes with it with time. All right. Enjoy the rest of the week. I hope things are going great with you. Starting the school season, if you have kids, we have holidays approaching coming up in the next couple months. So if you have New Year goals that you set last year, take a look at those, evaluate those, and be prepared because time is running out, and try and, reach those goals if you haven't, worked on them. So work on them. Maybe new things will follow, and new good things will come if you put the time and effort into those goals. All right. Thanks again for joining me, and I'll see you next week.